In today's video, we're talking about why this pullback from the DXY this week could impact the euro and the pound, and also a must-watch area for the DXY as we head into Friday's NFP. Now, before we get started, I do want to mention that if you want to see my trades in real time, plus get my help with your trading, and also get daily videos, be sure to come over here to this page. So click on the link at the top of this video and sign up with my preferred broker and deposit at least $100, trade at least one lot, and you will get a 30% deposit bonus plus lifetime access to our VIP group. So see the link in the description of this video, or if you're on the website, click on that link that says broker, and you will be taken to this page. And just a reminder too, guys, this is only one way to join the VIP group. You can also just pay outright, which right now through April 19th, I do have it reduced to 80% off. So it's an incredible deal. You're going to get lifetime access to VIP if you use that link. So see the description of this video for that. All right, so looking at the DXY, and first of all, guys, I was out for a couple of days. Still not feeling 100%, but I was, sick over the weekend, so still recovering, but here we are. So looking at the DXY first and foremost. All right, so we're going to talk about the DXY, the Euro USD, and also the pound in this video. But looking at the DXY, we do have the market pulling back this week after retesting the 105 resistance up here. So we knew that this was going to be a key level, right? We knew this was going to be resistance for the DXY. What we didn't know is that we would get a close back below 104.45 yesterday. So this is starting to look a little bit ugly here for the dollar in the sense that the market was unable to hold above 104.45, right? The pullback from up here was expected, as I said, but what would have been more constructive here for the dollar would have been a pullback down here toward 104.45, consolidate a little bit, and then break above. But instead, obviously, we have the market trading back below both of those levels. So the key for the DXY now is going to be this area between 103.6 and 103.8. So you can see that back here, this was the top of this consolidation. We've got the lows through here, and we've also got 103.8. So the highs back here, the lows, and also these highs right before the breakout. So 103.6 to 103.8 is going to be the must-hold level for dollar bulls on Friday. Now, we do have non-farm payroll coming up, so keep that in mind. We are likely to see a lot of volatility here for the DXY. And also keep in mind, too, that notice this candle that broke down here yesterday. Now, this candle closed right there at the low, and so far we have seen absolutely no retrace of this candle that broke down. Okay, so keep that in mind as well, because the market is coming down here into some support. So we've got the top of this channel right here, and we've also got that 103.6 to 103.8 area, right? All these highs back here, the lows through here, and these highs. So if we get the dollar bouncing from here tomorrow, then we could see a move back up here toward 104.45 to sweep this candle that broke down, okay? Because there is bound to be a lot of open liquidity back here in this area that the market is going to want to capture, all right? So keep that in mind. Now, as far as resistance goes, obviously 104.45 and 105 are going to flip to resistance once again with this close below. Okay, so the weekly close coming up for the DXY is going to be really, really critical. If it can hold above here, then we're still just looking at a range-bound market next week for the DXY. Now, if it were to close below, okay, somewhere down here in a very convincing manner, then that means this up here is your failed breakout, and we could see much lower for the dollar. All right, but this region down here is going to be a critical support level for the DXY. And of course, resistance again comes in at 104.45 and 105. All right, so let's take a look here at the Euro USD and see how this stacks up with the Euro. Okay, so right now we do have the market, reclaiming this trend line down here. So this is what we talked about recently. So from this low right back here in October, you can see we've got this low through here. We've got this one and also this low right before the breakdown. Now, the key to this breakdown, so those of you who have seen these videos for a while that have been with me for a few years, you will recognize that this right here, okay, this retest was an immediate retest versus a rounded retest. And the reason that matters is because notice this candle right here that broke down, right? The very next candle, or two candles later, I should say, retested that level. This one almost retested it. So it was almost an immediate retest on the very next candle. And anytime you see this, you do have to be careful. The preferred retest for shorting the market, okay, and the same thing goes for long in the market at support, is you want to see a breakdown down here and the market have a nice rounded gradual retest into resistance. Okay, the fact that the market retested this immediately and there was no white space, that's a good way to think about it. Is there white space within this retest? right? Or black space, depending on your chart, of course. But with the white space here, there was no white space with this retest because the very next candle nearly retested the level and the candle after retested, right? So this right here was telling you that there was a lot of strength down here for the euro. Now, it doesn't mean that, you couldn't short it, right? It doesn't mean that it wouldn't work out, because sometimes you will get an immediate retest like this and the market just continues lower. But it is something to pay attention to in the future. All right, so the key with the euro USD now is, and this is kind of the reason why I'm staying on the sideline as far as calling a breakout here for the euro, a bullish move, and a bearish move for the DXY, is first of all, we have NFP on Friday. That's going to affect things significantly. But also for the euro USD, we have the market sweeping this high from right back here. So if you guys will remember, in a video I put out, I believe last week, we were talking about this wick, this upper wick back here. Okay, so we had this long upper wick and no retrace through here. So this candle today is filling in that upper wick and then some. All right, so taking this out. Now, the reason it's taking that out is because notice this big red candle back here. The body of this candle was never retraced. Very shallow retraces on these two wicks. So this wick right here today is serving to fill in that gap that we saw back here from this candle, okay? Call it a fair value gap, call it an imbalance, call it what you will. The fact is that there was liquidity still left on the table from this move because it was so aggressive and because there was no retrace here immediately after, okay? So the one reason why, again, I'm saying that we have to wait for tomorrow, I want to wait for tomorrow, is to see where these charts close the week, but also the fact that, this right here, this sweep of those highs is kind of to be expected for a market. Now, I didn't expect this move down here, okay, to reclaim like that, but a sweep of these highs into a candle like this is very much expected. So tomorrow's NFP is going to be really interesting to see, how it impacts the euro and also the pound. So speaking of, let's take a look here at the pound, which, so far is reclaiming that channel once again. So this chart, guys, this market has been sideways for a long time. Now, the technicals here have been pretty good. Okay, we've got the lows down here. We've got these highs up here to form this descending channel. Now there was no question that this up here was resistance, and also no question that this up here was a failed breakout, aka a fake out. Okay, we had the daily and weekly close below. Furthermore, look what happened here last week. Okay, once we got the close below, notice how we got the close below right here. Notice how every candle up here tried to reclaim this level that it had lost. However, it failed to do so. Every single time it closed back below. So this right here was telling me that this was a failed breakout from the pound. Now, typically, a failed breakout to one side of a pattern triggers an extended move in the opposite direction. But so far, obviously, that is not what we're getting from the pound. But again, this is why I have to caution you to not be too quick to make judgments here, because if you take a look at the weekly chart, right, as bullish as this week's candle looks right now, keep in mind that we still have 24 hours left. We also have NFP coming up, and this can change in a hurry, okay? So just be careful with this, because right now we still have the market holding below this level up here on a weekly closing basis. The last 2 weeks held below, okay? So if this week closes back above, then that could be bullish for the pound. However, again, we have 24 hours left in the session and also NFP coming up. So it's going to be a really critical event here for markets like the pound to see where this closes. What I would say about this is if it closes on Friday, all right, so Friday right down here around 1.2620, that is going to be the level to watch. All right, so this level right through here, this is the level to watch tomorrow. If it were to close Friday back below here, then you have the pound holding below this on a weekly closing basis still, which means this area maintains as resistance, okay? And we've got support down here at these lows, of course, followed by 124.90. Now, if the pound were to close, at current levels or above, anywhere up here in this area, then you have to start paying attention to some of these highs, including that 1.2825 December high, because it would put the pound, back above here on a weekly closing basis. But it is all going to come down to Friday's close with NFP. All right, so all in all, very sideways markets, very confused markets. I will say, looking at this, you can clearly see that. The same thing here with the DXY, rotating lower from 105. Again, we knew this was going to be resistance up here. We didn't know, though, that we would get a close back below 104.45 to just give us more sideways action. So it's just kind of more of the same here in 2024, guys. If you're new to FX, markets typically aren't this confused. I will say that. I mean, if you look here this year, yes, we have had some decent swings here from the DXY, but when you're in the moment, right, of these type of consolidation moves right here, even this entire period back here in this area, right, and now this, it has been a very sideways year so far. And some of the pairs out there, like you've got the dollar CAD, is just a mess so far this year. So challenging conditions still this year, so be careful out there. It's really important to take your time, size things up, reduce your risk if you have to, and also your trading frequency, just because of the market conditions that we're dealing with right now. But tomorrow's NFP, guys, is going to be a big one here for the DXY with regard to this area down here between 103.6 and 103.8. Again, resistance comes in at 104.45 and the 105 area. Subscribe to the channel and click the bell icon for notifications. Don't forget to sign up to Blueberry Markets, deposit $100 or more to claim your 30% deposit bonus and lifetime access to VIP. See the link in the description, or if you're on the website, click on that link that says broker. Trade well, and I will talk to you again tomorrow.